Patrick, you are with Sports Impact and Webster University. You study this 365 days a year. What's new this year?
Well, essentially, the last couple of years with the new deal with CBS and Turner, you have all the games are live. That's been going on since 2010. The NCAA receives $775 million annually from CBS and Turner to show all these games. And I think one of the interesting things, you look at economics at work, you look at the secondary ticket prices at the 8 different venues that they'll be playing games the next 2 days. You know, the quality of the teams matter. The highest priced tickets on the secondary market are in Philadelphia, Kansas City, and Dayton. No surprise that in Philly, you've got the Dukies and Georgetown. In Dayton, you've got Indiana and Notre Dame. And in Kansas City, you've got 3 teams, Kansas, Kansas State, and North Carolina. So that drives up those prices on the secondary market.
And speaking of prices, March Madness now brings in over $1 billion in TV ad revenue, trumping the NFL postseason as well. Does this mark a bubble in sports programming rights?
I don't know. You know, we're past the recession now, so this could be a turnaround. Not surprising necessarily that you see March Madness now eclipsing $1 billion. As you mentioned, the NFL's postseason is around $970 million. Part of it is just simply the fact the sheer number of games and inventory create more opportunities to show games over a 3-week period, whereas the NFL, you only have a couple of dates where you have those playoff games.
Let me bring in Liz Ann Saunders here, our guest host, strategist with Charles Schwab. If I bring up the stock of CBS, it's done better than good. 5 to 50. Now, I know that's a bull market, and all the way up, people said it's not a bull market. How do I select shares of CBS today, given a move from 5 to 50? There's a point where even Liz Ann Saunders says
I mean, I don't cover
the
individual stock, and I think that is the quandary that a lot of investors are in, particularly those that have been on the sidelines. Whether they're looking at individual companies or just the market overall, I think, how could I possibly get in now? And it all comes down to valuation. I think the valuation on the market is pretty reasonable, particularly given that inflation is so low, and you have to take inflation into consideration. But there's that angst that investors feel buying at these levels, and they're waiting for the correction. And it's elusive, maybe because there's so many people waiting for the correction. That's why when you saw the Cyprus thing first erupt, you got this big push down in the futures, and buyers stepped in immediately because there is so much.
No, we're also waiting for the Blue Hens of Delaware to make it next year.
Well, whether it's inflation in stock prices or inflation in the advertising prices, what we know, Patrick, Rishe, is that there is no payday for the schools themselves. There's no lasting effect. It doesn't lead to increased student applications or fundraising. As the dollar amount here with NCAA playoffs get bigger, is there going to be a change in that system?
Well, first of all, you don't want to overstate that point. There is some money that's going to the schools. When every game that a school plays in, they earn a unit for their conference, and then it's the conference responsibility to then allocate that money back to the schools. This year, 1 unit is worth $250,000. So if you make a 3 or 4 game run into the tournament, that's money for your conference, which comes back to the school. At least it's split up. But I will say this: there have been some examples, there have been some situations, and I expect St. Louis University and I expect the University of Miami to be examples of this year, where you have unexpected success, like George Mason a few years ago, like Butler had a few years ago, and that does increase the applications to the school.